So yeah. And so what are you thinking then? Like on a monthly fee?
So what I would, what do you think this guy would be comfortable paying you based on where he's at mentally and emotionally right now?
I have no idea. I was kind of starstruck to even be on a call like this. You know what I mean? I mean, I'm
Totally,
like,
totally.
you picked me. um, but the funny thing is, the more like I felt like it was almost, I mean, maybe you felt differently, but I'm sitting there and I'm thinking the guy's basically saying, throw the proposal, throw a number. And if it works, you've got it. But I mean, you're just building that pipeline. It's like, you're just sowing seeds at that point. And now, now these people are coming, they're on the phone, they're communicating, they're interested. It's,
Good, good.
which,
And these are the people who've been following you for a while, right? And so
right.
yeah, yeah. And so this is what we did with Kendra when we were kind of running through just what in this company situation, they had an accountant, they were paying $12.50 a month. They were not responsive. It was just basic bookkeeping, plus they were doing accruals, and the accruals weren't even being done right. So I said, and they were already wanting to leave their accountant, not responsive, et cetera. I said, just having the books done right is worth an extra $1,000 a month. If they're already paying $12.50, they're not going to, scoff at that. What they really need is this job costing. There was a lot of uncertainty about, where do we make money? Where do we not make money? Right.
Right.
So that was the second element of this. And like I told you, like compliance job costing tech was this. And so what I think we have is like,
and so one of the things that's interesting to me, and I haven't been on this side of it, but job costing for the contractor level makes perfect sense for me. But on the other side of it, I assume we basically are going to have about the same transparency that the contractor has. Unless either way, I mean, whether they're marking it up or we're paying their a fee for each unit to be built by them, however that works. I mean, either way, we're still job costing it the same way. We just don't know exactly what this particular item might cost. Is that kind of how you view it?
100, like 100%, but you're going to go probably. Oh, so are you saying, like, theoretically, like the contractor should have a set of books to where, they're kind of on the same page, right?
Well, like he's going to know what he's paying the, we'll say framers, trim carpenters, painters. On our side, we are not going to necessarily know that. We're going to probably be either billed in draws or through percentage completion of the project. So that's really what we're worried about when we're talking about job costing is, hey, we're 25% completed the project and we've already paid this much. We're under over budget. I mean, obviously the contractor's not locking himself into a flat rate fixed price today. So there's probably some more dynamic. I've never worked in large scale construction like that of 36 units. I guess that's questions for me to go back to him and ask, which may be just as good as anything, is to kind of throw a proposal and then go back and ask a bunch of questions that sound like I really know what I'm thinking about how this is going to work.
So this sounds totally dumb, but I'm just rolling with it for right now. We can come up with. So reviewing the books to make. So one time we're going to have this job costing setup implementation. There's also going to be like the cost segregation is going to be like at some point. It's not going to happen until they're ready for it, but it will happen. So I'm thinking about the monthly element here, and let's start off with this top one. And I think maybe monthly partner update calls. Is that how you framed it? Okay.
Yeah.
Maybe these can be quarterly partner update calls, and let's just do annual. So the other element that we have here is, and instead of like reviewing books,
financials.
Yeah, we're going to say review financials and analyze, like the costs essentially. I don't. That's just what I'm going to put for right now. Okay, and the other element of value that we have here.
Well, I think at some point somebody has to manage. Somebody has to manage the investor management portal, or oversee that at the very least, or I don't know that I'll be actually putting the information in, but you've got to at least review what goes into it. So I guess you would still call that managing.
Okay, yeah, we can roll with that. And so that's just something we might do. in this middle one as well. I already copied that, didn't I? But okay, so now the staff training.
I feel like you're gonna.
Yeah.
I feel like you're gonna be doing that regardless, right?
Yeah.
So that's just.
So we're gonna move this up.
I mean, there's no way he's got a perfectly trained staff that.
No way. And we're gonna break these. And we're just going to like cost analysis, material cost analysis.
Yeah.
Okay.
And I think one of the other things to really press home, because I think this is the difference. I think this is big. What he's looking for is it's more interpretation. Like, what does this mean? Type work. You know what I mean? Analytical type stuff. More words than numbers, right? So I think I guess I could phrase that somewhere in the proposal.
So that's a very, very awesome point, David. Like, yeah, the main things that are valuable here are like the intangibles: access, advice, support, guidance. How do we make those things tangible? We could say, one of them is like, what is our response time?
Yeah.
We can promise if they pay more, we can promise them a better response time. And the other thing is going to be just like, how often does this gentleman consider him like himself the CEO? It's over on this other side.
He's a one of two general partners. So let me see what he on his description. What he Yep, managing general partner, investment manager.
How often do you feel like you would need to meet with him, and then we can reverse engineer what that would cost him?
Oh gosh, I think we would be corresponding quite regularly. What do you think? Every 2 weeks?
Okay.
I mean, I don't know. I hate to say weekly. That seems like a lot, but
that seems like a lot.
But I think monthly is not enough.
Okay. Bi-monthly?
Yeah, I think so.
Bi-monthly meeting with general managing partner. And here we can do.
But obviously in the beginning, I guess part of that setup implementation, there's going to be more.
Okay. Let's see here. Are we leaving anything out?
Material cost analysis, annual partner update, accounting staff training. Monthly reporting for work in process. You would leave that for probably the middle package.
Okay. I like that. Let's see.
Because you're definitely not going to, it's a necessity, but you're not going to put it in the first package. I mean, let's face it, the first package he's never going to go with anyway. We know that.
Top package, monthly work in progress reporting.
Yep.
Okay, and this is something you would probably do, right? And not the
team. Oh yeah, I would think so.
And with the second, would you do quarterly or not do it at all?
Yeah, quarterly. I think it's really important. So.
Okay.
I actually think it would be. Of course, it's almost impossible to do things on less than a monthly basis, but I almost think it's something that should be done more than monthly. But.
I think I would probably try to stick with monthly, just protecting your time.
Yeah. Well, plus it's so hard to do things on a less than month basis.
Yeah. So in the middle package, we can leave that monthly in there too, and what I probably want to do is like move this up a little. Well, before you do the material cost analysis, we probably do this. This right here is kind of the basic. What are we missing on here?
We've got things about, I've got notes of visibility, transparency. I mean, that's probably more something you'd put in the write-up though, right?
That's something I'd probably
talk to him more about too.
Well, yeah. So,
what about distributions to partners? That calculation is going to have to be done.
Okay, partner distribution calculations. And that's probably just going to have to be done no matter what. So
Yeah.
we might change, like the order of these to like make them, a little, but whatever, they're fine for right now.
Yeah, I think that's a good start. I mean, I think that's pretty, I don't know, you can't really get into too much more depth than that. I mean, I'm just trying to think. So now let's break that down into, well, you've got response time there. So do we want to talk about readily available, like a 24-hour response time on package 3, or is that probably too responsive? I don't know.
I would probably put 24-hour response time, but I would just, communicate to them that that's during the week, the business week.
Gotcha.
And this one can be, you probably do 24 hours there if it's in business week 2, and this one can be like 48. This is one that Mark put together, and I'm just kind of going through.
Yeah, I wasn't even thinking about those lower level things, but like reviewing, because I mean he's gonna have a team that's gonna be writing checks, and so he's probably gonna want somebody to review like bank reconciliations, and you know what I mean. Maybe I'm too high up, but I don't think so. I think he's looking for somebody to kind of ensure that.
Honestly, in that, like, what we call like financial statement review, which I probably wouldn't use the word review. I would come up with another word just because, reviews, it's a CPA assurance service, analysis.
Analysis would probably be best, wouldn't it?
I like that word when I can't think of anything else.
Sounds expensive.
Exactly. That's good. And that's probably what I would do, like those things: transaction categorization, bank reconciliation, credit card reconciliation, financial reports, financial meeting. We might include that somewhere else, but like those are things they need reviewed. Yeah, for sure. Cash management. I'm not sure about it's. I think their current accounting team would do most of these things.
Yeah.
We talked about the tax prep.
But now, would you do 3 packages, or would you just simply throw one package in there and just throw everything in, throw the best at the best, and put a price on it, and then see what he says? And
I wouldn't.
Okay, because then you're gonna get a yes or no.
Yeah, exactly. You're gonna get a yes or a no, and if we want, especially for people who we're not really sure what they want, right? But they want to pay us.
Right.
This helps them understand,
what they're getting.
Right. What do I want to buy too? So he might, I would say this first package, I would say, no, this right here, after looking over everything, thinking about it, I think this would be your best option, right? And
Right.
Just see what he says. And if he's like, for Kendra, she didn't have to show the second options, right? They were just like, okay.
Yeah.
If he gives you any pushback and you say, look, I understand this right here is, you're still in the startup phase, frame it like that some way, and so, maybe that's something that we can grow into. So I did go ahead and, put together a few other different ways we can work together, right?
Mm-hmm.
And
so let me ask you this: if this guy's not, like, this stuff hasn't happened yet, so we know that he's not going to hire me today, right? He's not going to pay me today. I'm not going to do anything. So how do you handle that? You basically put an agreement out there that says, hey, we're going to do X, Y, Z.
Tell me what you mean by that.
Oh, I mean, basically there might not be anything going on today, right? Because things really haven't commenced. So you would wait till things commence to be hired, or would you do an agreement and make him pay some sort of retainer to say, I want to use you. I'm going to give you $2,500 to kind of retain you for your services. You see what I'm saying?
Totally. And what I would say is I wouldn't kind of do a retainer where, like, are you talking about kind of retainer where you're going to,
just show we're committed.
Okay. So what I would probably wouldn't use the word retainer. What I would do is, like, there's one element of this that you can sell them on right now and he can pay you for right now. Oh, I'm okay. With that. But it's that implementation, right? And
right.
This part of it. The other thing about this is, the accounting staff training, for example, they probably need, and they probably, they have financials right now, right? Even if they're not doing anything, it's just right. Like, what do those financials look like? So if he pushes back on that, what I would say is, I'll tell you what, let's start out with package 1 for right now, since you don't have a lot of activity. We can go ahead and get signed up with that today. I'll send over an engagement letter, send you the ACH, as soon as that clears, we can get to work. And then once you have some more activity, things are picking up, you need more of my help, you can, we can talk about upgrading into one of these other packages. That's how I would say that.
Okay. So now the one-time job costing setup and implementation, what are we thinking about there?
I'm thinking I don't know because my mind's having a hard trouble with the scope,
Yeah.
of that. And what I think it's probably fair to do is to say, this could be another value element of these packages, right? Like if he goes for $100,000 a year, maybe you include that. Maybe you don't with these two. You don't have to do that. I'm just thinking through that here. But what I
It's
would
all,
do, I'm
it's
sorry.
almost better to just get a monthly rate, right? Because the scope is just so, yeah. And then what about commitment? I mean, obviously he's not going to want to switch CFOs in the middle anyway, but would you hold some type of commitment, or would you just say, if you're not happy, then,
You can definitely put it on here.
I mean, at the end of the day, if we're not happy, then we're going to split ways anyway. But
That's my thing is, I really don't bother with it because if people aren't happy, it's not going to, it's going to end anyway.
but you'd sell it as there's no commitment, right?
Totally
We
right.
just finish our month out and that's it.
Um, like no contract, month to month engagement.
Yeah.
And maybe he does need a 12-month contract or something, right? As another value element down here.
Okay.
I've seen people do that.
And then like for package 2, 90 days notice for cancellation or something.
Right, 90-day notice for cancellation services. That's exactly how I do that part of it. But with a one-time job costing thing, I would put a price on it for sure. And I would kind of, when we're walking through this and you get to the part where, you're talking money and you're talking services is like, you really need this setup for you. And so this is going to be, a one-time project that we do. If you came to me and this was all you needed, I would charge you X dollars for that. What feels right to you? X dollars.
10,000,
7,000?
10.
10?
Yeah. I mean, what do you think?
We'll say 12.
Okay.
I would say, if I'm going to set up, job costing, do it the right way, that I would charge 12,000 for that. If you decide to work with me on, a monthly level, monthly package, what we can do is I'll be willing to waive that setup fee because I do know that this is going to be a long-term engagement. We're going to be working together for a period of several years. I want to start, off on a position of goodwill. You just frame it like that, right?
Mm-hmm.
And you're right. So the other problem with like one-time projects is like it depends so much on the client that you could have a one-time project that runs for a year. You know what I mean? Like
Mm-hmm.
Shanita's dealing with something that's been like, a quote unquote one-time project she's been working on for 6 months because of lack of responsiveness,
Right.
So
Right.
that would have be kind of how I frame it is like, I want to do this for you anyway, but honestly, like at least on this package right here, it does need to be the 12,000, one time costing. Come on now, set up. And maybe we just say it's included with these. Put that for right now.
So what do you, so for the top package, you're thinking 8,000 a month.
Yeah.
And then for the second package, what do you think? Like 6?
I do.
And then for the first package, 3 or 3,500.
Yeah. So what I would do here, we want to sell on this, and this guy might just buy it. So what I would do is I'd say 3,500. 35,000 sounds good.
Yeah.
Yeah. Oh, no, come on. I'm on a new computer today, so I'm practice bringing on my other MacBook. 5,500. No, okay, I'm thinking the wrong way. I'd probably say 6,500 and then 8,500. And so what you've done there is like you kind of anchored this as being a good deal, right? Because it's only 2,000 more than that,
Yeah.
Does that make sense?
Mm-hmm.
There's 2,000 there. Okay. You either do 3,500 or, 2,750 just to like really establish the gulf between these two, package lowest and one. And then there's a big gulf, not a big gap here. You know what I mean? So it kind of makes the
Yeah.
most sense to do that.
And the other thing I guess I need to think about in my mind, this guy has to have somebody in this position. This
Yeah.
isn't like a unnecessary. I mean, he's going to pay somebody what, at least probably if he hired somebody to be this person, he's going to pay him at least 60 grand a year.
He's going to pay this person 150 for
Okay.
sure. Like, yeah, like a full-time CFO, 150. And I would, that's how I frame it, so like it's either 96K or 150K plus benefits, plus, et cetera, right? All those office office space,
Right.
uh, all those costs that he's not going to have because working with you. And very few CFOs he could hire understand accounting. That's not what CFOs do, really. Or
Right.
they're not on the ground in it like you are. I'll say that.
Right.
So
In this particular industry.
here's what I'm going to tell you, David. You're worth every penny of that right there. You're worth every penny of $8,500 a month to this guy. If he doesn't see it, that's totally okay. I would just listen. Definitely record the call and send it in, and we can come back and we can come up with another approach. But if he's not ready to make a decision right now, that's fine. I honestly think this guy is, because he's very solution aware from all the things he was saying, and he's not playing with all of his own money, right?
Yeah.
So a little bit of it is house money, and he's looking at this like, I'm going to get someone who can, make, look out for me, as well as do the accounting work. And so
Well,
that's,
and I think what's so funny is he's been down this road with a young CFO type person, and it just obviously didn't work.
gotcha.
He didn't get what he was looking for. That's why he jumped over into this realm and found me through market, through the construction. He was seeking this person out. So I think that's pretty interesting.
Definitely interesting.
So at this point, what would you do? Reach back out and say, hey, can we jump back on another call and throw the proposal and have that discussion and see what happens?
100%, 100%. I would walk through it just like, yeah, I would have that exact same conversation. I spend a lot of time thinking about it. I've got a couple different, I've got a, solution that I think will work for you. Here it is. And when you name that price, say it with conviction is what I would say. Say it like you genuinely believe that you're worth every dollar of it, because you are.
Right.
And if he does have, pushback, it's not a bad thing. Totally normal. If it just means he doesn't understand yet, right?
Right.
And that's okay. We can help him understand. That's what I would do. I get on a call and throw it out there, and yeah, at this point, we've got a good hypothesis. We just got to run it through the test and see what he says. Let him negotiate with you if that's what he wants to do, or he might be ready to write you a check today.
Yeah.